Hello, everybody, and welcome to the Vancouver Resource Investment Conference. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd. Tickets are in the description below. But for now, we're bringing the VRIC to you with our series of expert online panels. And I'm very excited because today we're going to be talking about investing in commodities in emerging markets and countries outside of North America, a place most investors don't think about. So I'm very excited to welcome Ladislas Maurice of the Wandering Investor and Scott Osheroff, the Chief Investment Officer of the AFC Uzbekistan Fund, to discuss investing in commodities in emerging markets. Gentlemen, welcome to the show.
Thank you, Jesse. Glad to be here.
Thanks, Jesse. Likewise.
Appreciate both of you coming on. So I want to start with a broad question, and that is why should investors look outside of North America when it comes to both the commodities space and investing in general? Scott, I'll start with you.
Sure. Well, you have the rest of the world. And North America is, of course, the home of the biggest capital markets, but there's a lot going on in the rest of the world, and it's largely not followed so well. And that means that you get access to very fast-growing companies in strong economies that are very cheap. Some of them paying great dividend yields, but nonetheless, you've got secular growth trends in a handful of economies. And I moved to Asia 12 years ago. I've lived in Mongolia, Vietnam, Cambodia, Uzbekistan, Myanmar, and what I saw moving to Asia is that you basically get to invest a generation behind. You look at the wealth that was accumulated in the 70s and 80s in the United States as the baby boomers consumed. They had children, sent kids to university, and they spent money. Well, you're seeing the exact same thing in the developing world. They're a generation behind. The average age for most of Asia is 30. People are getting married, having children. They're buying cars, they're buying houses. So there's a huge opportunity in a handful of countries that also have very low leverage, unlike most Western societies.
And Ladislas, your thoughts on reasons why investors should be looking outside of North America and their home country for opportunities?
So I completely agree with Scott. There are a lot of opportunities all around the world, but even not even discussing this, just the point at the end of the day is it would be very unreasonable for people to be fully invested in their own country. Like the reality is, if you live in the US, if you live in Canada, you already have your whole network in the country, your pension fund in the country, your house in the country, your family there, your whole education background, your value essentially is in the country. So then what are you going to do? You're going to put 100% of your investments in that same country? It's just unreasonable in a very fast changing world to be all in a single jurisdiction. So just from that point of view, people should diversify. So I'm not saying, oh, go put everything in Angola, for sure, no, but have at least a little bit of your investments overseas in emerging markets in countries that have completely different dynamics, as Scott mentioned.
Yeah, that makes a lot of sense. I'd like to discuss commodities now and find out which commodities in particular you're both bullish on in the moment, if any. And feel free to name non-commodity assets as well. I'm just curious where you're both seeing value when it comes to international markets. And Ladislas, I'll start with you first.
Sure. So in terms of commodities, personally, I'm long oil, uranium, coal, gold, natural gas. They each have their own story. And then I played across various jurisdictions, both in Western markets and in emerging markets as well.
And Scott, yourself.
I echo Ladislas. The only thing that I would add to that is cannabis, which a lot of people wouldn't think of when they think commodities markets. But you look at what's going on in the US, and the HHS recommend to the DEA on the 29th of August that they reschedule it from Schedule 1 to Schedule 3. You had a huge boom in 2021 during COVID, during the lockdowns. You saw a huge amount of cultivation, especially in the Western United States, and that collapsed prices. So now you're seeing a bottoming out. There's a huge amount of regulation, but I think that for better or for worse, cannabis in due course will be legalized, and it is a completely underfollowed industry, and certainly it's been bludgeoned to death over the past few years. So that's, I think cannabis is probably where uranium was in 2019, 2020. It just feels like it's just on the cusp of that washout, with a handful of companies that are actually showing good free cash flow generation, profitability. But again, very underowned, largely because institutions won't touch them until it's rescheduled.
That's very interesting. And are you also bullish on the fossil fuels as well, natural gas, oil, coal? And what are your thoughts on uranium here? Do you think we're at a point where it's overbought at the moment?
Well, firstly, 100%. I mean, Ladislas and I share a similar view on the world, and I believe that you want to own stuff this decade, especially. And then in terms of investing outside the U.S., I think you want to be investing into countries that are producers of stuff or have food and energy security. I think it's going to be a theme that people are going to wake up to this decade. So with uranium, I don't feel like it's overbought. It feels like we're on the cusp of breaking out here. Certainly the easy money's been made. I mean, I started investing in, I believe, 2018, 2019. So things aren't as cheap as they were back then. But if you look at where we're going, and naturally the fact that it's becoming more of a mainstream story, we're getting to the point where it gets exciting from a percentage gains aspect. But no, I don't think that we're overbought right now. You're just starting to see a lot of the micro caps just begin to break out really over the past week. So it feels very reminiscent to about 18 to 24 months ago.
As a bit of background, I met Scott in Uzbekistan in 2019, Scott? I went to Tashkent because the country was opening up, and I went to Tashkent looking at real estate. I wanted to buy real estate there, and then I met Scott. And then in the end, I left Uzbekistan not having bought real estate, but instead I bought a bunch of Uzbek equities and uranium stocks.
Interesting. I would definitely like to talk about real estate in emerging markets a little bit later as well. But Ladislas, first, you mentioned precious metals. I'm wondering what your thesis is there. Do you view gold and silver in a similar light in terms of both being monetary metals? Do you look at silver more as an industrial commodity? And what's your basic investment thesis for both of those metals?
Cool. So they're very different. Gold, I just look at history. For thousands of years, humans have been gathering gold and saving gold and have, believed that gold is worth something. It's only in the past few decades that people just suddenly grew out of it or don't believe in it anymore, but it's going to come back at some point. It's humans don't just give up habits that they formed over centuries, if not, millennia. So right now, especially with everything happening in the world, with all the money printing, with all the tensions in the world, I would say that, again, from a diversification point of view, it would be unreasonable to completely ignore an asset that we as humans have valued for a very long time, and which, again, a very large part of the developing world still very much values. It's really principally in Western countries that we have forgotten what gold is. But you travel to emerging markets, people are still very much focused on gold. I mean, Scott, right now you're in Southeast Asia. People understand the value of gold.
Yeah, 100%. And when I used to live in Vietnam, it was much more prevalent, but technically you can still do it. You can still buy real estate with gold, with bullion. Asians understand the value of the metals.
So
Very interesting.
if the thesis is that gradually power will shift from west to east, then you might as well go with some of the core values that some of the newfound wealth will migrate to. When it comes to silver, I think Lobo Tigre has a very good thesis on that, in the sense that silver does have a much stronger industrial component. So sure, there's a monetary aspect, but there's also an industrial aspect. So it's a bit in between. So, am I bullish silver? A bit less than gold. Really, gold plays a safety role in my portfolio. I don't see physical gold as a speculation. I see gold miners as a speculation, but physical gold is just insurance. So, people go and buy these insurance policies at the bank that have, I don't know, German bonds in there and French debt, and whatever. I feel that having physical gold in your own hands is safer ultimately. So personally, I prefer to stay it this way.
Well, let's explore some of these commodities in these markets outside of North America, outside of Australia, the UK, the standard places that people invest. So Scott, I'll turn to you for this. When it comes to uranium, oil, coal, natural gas, these types of commodities, gold and silver as well, what are some of the countries that are investable for miners in those particular commodities, and oil explorers and producers, etc.? What are some of the main countries that come to mind that you think people haven't been paying attention to and maybe they should?
What I've learned living in frontier markets for nearly the past 12 years is that everywhere is investable. There's a very big difference between perceived risk and actual risk. And the reality is that, you look at Niger, for example, and the coup that recently happened there. People assume that frontier markets are lawless. The reality is that everywhere has a similar-esque risk profile from the standpoint of, you look at what the UK announced, I believe, last year with super profit tax on oil and gas production. You look at what Mexico's announced regarding lithium. You look at Peru, and then I think Sierra Leone is looking to raise royalties on gold. So really, the entire world's investable. Countries that I'm really excited about today are countries where that are basically commodity producers, but that also have a diversified economy. So I'm a bit rogue in the way that I look at the world, and unfortunately, Americans can't invest in some of them. I'm an American, but Russia and Iran are of extreme interest. They're very misunderstood countries, and they're both doing very well. But for the Western investment community, the other countries that I like are Brazil, Colombia, Uzbekistan, Kazakhstan, the Gulf countries. I think Saudi is very interesting.
And Ladislas, yourself, would you concur with many of the countries that Scott mentioned? Is there any you wanted to expand on or add to that list?
Yeah, I just want to expand on Scott's point in terms of with regards to the difference between perceived risk and actual risk. That's actually where the arbitrage is in emerging markets. So look, once in a while, when you invest in an African country, for example, there will be protests, there will be a whole bunch of issues. We saw it recently in the last few months in Senegal. And then that's when all the naysayers come out and say, I told you so, Africa's too dangerous, look at what's happening, etc. Guess what? Didn't impact the mining operations at all. And when you develop I lived for Africa in 7 years. For 7 years, traveled all over. Look, when you're trying to build a mine somewhere in Ivory Coast, you're not going to have a blue-haired semi-male who discovers a new species of ants and then somehow stops the whole project, even though you have funding, you have all the permits. That's just not going to happen. The ideology in a lot of these countries of government is making money. Why? Because they really need the money. The people are poor. The people are suffering. They want the jobs. They want the development. They embrace it. So sure, there are going to be a few issues here and there, but overall you have government that is a lot more supportive of development, especially in the natural resources space, because they know that that's ultimately all they have for now in their stage of development. So in many ways, I feel more comfortable and safer investing in quite a few African jurisdictions, such as Senegal, Ivory Coast, Namibia. You can throw in little countries that have constant current account deficits like Malawi, etc., where the government really wants investment, than investing in some Western jurisdictions, trying to, start a mine in the UK or in some parts of Canada and some parts of the States. So I think people really need to have a little bit of perspective, and there's no such thing as Africa. There's dozens of countries in Africa, each with their own differences of government, of everything. So you can't just paint a big picture. Same thing with Latin America. Some countries are very investable, others are not. And even the ones that have constantly negative headlines, they're priced accordingly. and actually at a discount that is bigger than the headlines would tend to justify.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Yeah, very good points, perceived versus actual risk. I think a lot of people think that North America is a safe, stable jurisdiction, but the points you brought up there, I mean, environmental red tape, ESG mandates, just general permitting times can be absolutely insane for some of these projects. And they want to speed them along in these developing nations that you're talking about because, yeah, they want to make money. It makes perfect sense. How do you evaluate these companies in these different countries? Because obviously you can't hop on Morningstar or some of these other sites that people use to evaluate these companies, to look at all of the ratios, to look at the balance sheet, the income statement, etc. So how do you go about evaluating them? Is there a place where that information exists? Do you have to go country by country and kind of try to figure it out? Do you run into problems where sometimes you can't find information in English? Ladislas, I'll start with you on this one.
Look, I mean, generally speaking, these mining companies are listed in Canada or in Australia, so there's not that big of a difference in terms of access to information. It's a bit harder to go there on the ground and figure it out for yourself. But in terms of all the statements, etc., it's all there. Now, in terms of local understanding of local issues, yeah, that's a bit more complicated. But that comes with the risk and the valuations.
Right. And Scott, are there any situations where in Uzbekistan, for example, you've got a fund there where you're investing in companies that aren't listed on any of the exchanges in North American countries? How do you get access to that information? Is it easy? How do you evaluate those companies that are in your fund?
Yeah, it's very easy. None of the companies, unfortunately, are listed abroad, so they're all domestic. But you have a site similar to CDAR or SEC.gov, where you've got quarterly financial data, announcements for EGMs, for dividends and whatnot. So it's all there and transparent. You can have meetings with management. Surely it takes a bit more effort to go and spend time in the country, meet management, kick the tires of the company. But it's all possible. And sort of, adding a bit to what Ladislas was talking about, I think when you look at investing in some of these lesser known jurisdictions, sure, most of the mining companies especially are listed on international exchanges in developed countries. But what it comes down to is if you don't know much about the nitty gritty of tribal disputes and whatnot, and say a certain part of Indonesia, you position size accordingly. Don't put 20% of your book into a company operating a mining business in Aceh province that has Sharia law, and it's sort of the Wild West. Position size accordingly, and that's how you also account for the unknown unknowns, because there's plenty of them.
And is there any concerns with some of these countries? China comes to mind as one, not really an emerging market, but a country outside of North America, on sanctions occurring as has happened in Russia. Because a lot of people were invested in Russian stocks through the ETF, and pretty much lost everything when those sanctions came down. So I'm wondering if there's any thought as to investing in countries which could potentially face sanctions down the road. Is that something that you put into your analysis when you're looking at these various emerging markets? And Scott, I'll start with you.
No, not really. I got stuck with some Russian investments, but that's where, going back to what Ladislas said a few minutes ago, is diversifying your portfolio, not from the standpoint of just having your assets outside of your home country, partially, but also you can have brokerage accounts in the Emirates, you can have brokerage accounts in Hong Kong. So even if you're still from an unfriendly country, you can hold those assets more easily, and in some cases you can actually sell them. So diversification and understanding those potential risks and positioning for it is important, because certainly the world's bifurcating. I think that over the next decade plus, it's going to become a more difficult place to do business as we experience sort of deglobalization and increasing protectionism and whatnot.
And Ladislas, your thoughts on that, and also maybe if you could shed some light on how your average investor can open up brokerage accounts in these different countries. Do you have to actually be on the ground? Do you have to travel there to set it up? Is there a way to do it online? Are there any language barriers there? If you could shed some light on that, that'd be great too.
Yeah, sure. So look, sanctions. I also got burnt on Russian stocks. Look, it's part of the new reality. We as Westerners have to take this into account when making investments. Personally, I'm staying out of China, though the valuations are very attractive, etc. It's just when you hear all the rhetoric in Western countries, do I really want to go there now that I know that how the West is going to behave and how then China is going to treat Western shareholders? So there are enough opportunities in the world to not have to invest in countries that could potentially face sanctions. So having said this, what some people are doing is they're acquiring citizenships of countries that are more neutral. So for example, let's say that you, Jesse, with a North American passport, you want to invest in, again, this is absolutely not financial or investment advice or anything. You want to invest in Russia. Well, what some people are doing is they're acquiring other citizenships, such as in Turkey, where you can, if you buy for $400,000 worth of real estate, you can get Turkish citizenship. And then as a Turk, you can then invest in Russia and you're deemed to be from a friendly country. So it means you can just transact normally in Russia. If you're going to do this with your North American passport, you can buy assets in Russia according to Russian law, not according to your own country, but then they would get frozen immediately. So people are starting to do this. They're starting to see the long game and they're acquiring other citizenships, other residencies, opening other brokerage accounts, etc., creating essentially another pathway to a different world. How can you open brokerage accounts? In most cases, you can open a brokerage account remotely. You can do that in Hong Kong and in Singapore. I mean, even in Russia, you can open a brokerage account remotely. Some countries you have to go do it in person, like in Turkey. So it really depends. But generally, you just need to Google around, look for a reputable exchange, contact them, and then it's just a lot of, like everywhere in the world, it's just a lot of KYC. So a lot of paperwork, certified copy of passport, utility bill, blah, blah, tax number, blah, blah, notarized, and then DHL, then this and that. It'll take you a few weeks to open a brokerage account, but then you can transact.
And Scott, I'll go to you next. Despite everything we've discussed so far, what are some of the main pitfalls that we haven't yet talked about that you think are there for people who are trying to invest in emerging markets, and how can those best be mitigated in your view?
I mean, if you're investing in emerging market stock exchanges, and in those domestic markets, the big issue is getting access to information. In some countries, for example, in Uzbekistan, everything's in Russian. You look at a handful of Latin American countries, most things are in Spanish. So you use Google Translate. We have the technology to help. Then it comes down to really, liquidity can be an issue depending on what you're investing in. And then again, you mitigate that with position sizing. But what I've learned over my time running around frontier markets and living in them is they're not as frontier, if you will, as everyone thinks. Vietnam is it's a developing country, but in terms of quality of life, it's better than most of what you get in a lot of the Western world. Uzbekistan blew me away when I first went there in 2018. The roads in the first and the second tier cities are pretty much all 4 and 5 lanes each direction. There's not a pothole in sight on the main roads. There's no garbage, clean. So go and visit these places and get some exposure, because ironically, most of them are safer than most big cities in the Western world these days. I hate to say, being from Los Angeles. they're safe. The people are very friendly and warm. They will welcome you. They are keen to show you their country, and it'll be a great experience. So I'd say make a trip out of it and visit some of these places. They'll surprise you, and if anything, that'll get you more excited. For example, one of the challenges that we've had is you talk about Uzbekistan, and people think Pakistan. They call it Uzbekistan. They think Afghanistan. Then they go there and they realize this is the ancient heart of the Silk Road. Same with Kazakhstan, a beautiful country, phenomenal nature, great infrastructure, but people think Borat, unfortunately. And then you go to this part of the world and you realize it's superb. There's a great investment case, and everyone that has ever come to visit the region that I've met leaves more excited than when they arrived, because they either didn't have any expectations or their expectations were so misaligned with reality. And that's usually the case.
And Ladislas, any challenges that you faced over the course of your investment career investing in frontier and emerging markets? And maybe if you had some thoughts about what Scott was saying as well about the importance and the value of being boots on the ground in some of these countries to see them for yourself.
Sure. So I would just like to reiterate Scott's point on liquidity, because that is something that Westerners, especially North Americans, do not understand. Liquidity. Americans live in a country with just endless money. You can buy and sell anything in an instant. You put your house up for sale, 3 days later, it's gone. In most of the world, if you sell a house, it's going to take at least a few months, right? Even in a capital city. So especially North Americans go to these emerging markets and just don't understand that when they want to sell, it's not immediate. When you want to sell a stock in Uzbekistan, it depends, the top 5, 6, et cetera, are pretty liquid. It's not an issue, but some of them, it might take you a few days, and people just need to be ready and they need to understand that when they invest in these emerging markets, and especially in frontier markets, that you shouldn't invest money that you might suddenly need fast for whatever reason. So that's really important. The second one is volatility. If you're the type of person that panics whenever you see a negative headline, just please stay away from frontier markets. Look, countries like Turkey. I think Turkey makes CNN headlines every 2 weeks in a very negative way for the past 10 years. And guess what? Real estate has been doing really well, and the equities market this year has also been doing very well. So if each time you see a negative headline in Western news and you think, oh, what's going to happen to my like gas field in the Black Sea in Turkey, and you just want to sell, it's just not for you. Please do yourself a favor. Do not invest in emerging markets, in frontier markets, if you freak out whenever there's a negative headline, because negative headlines are just part of the deal. I remember when I worked at Nestle, we had one of the zones was zone AOA. So it was Africa and Middle East and Asia. And internally at Nestle, we called it zone CNN, because it was the zone that was always making headlines in the news. And in terms of, with regards to spending time on the ground, yeah, that's what I do full time. I travel full time in mostly emerging markets, looking at investment opportunities, real estate, stocks, etc. Like I mentioned earlier, I went to Uzbekistan because I wanted to buy real estate, did my research on the ground, met randomly Scott at the SPO of some glass maker in Uzbekistan. We started chatting, and then he convinced me that stocks were the way to go, and he was right. So then I left with a brokerage account rather than real estate. So being on the ground, speaking to locals, speaking to expats, speaking to people that are active on the ground in countries where access to information is not always easy, it makes a huge difference. I have a huge ROI on all my trips. That's why I'm traveling. I could just stay somewhere and, just not do much and just work online, whatever. But I get alpha by traveling. That's why I travel.
Very interesting points there. Let's touch on some non-commodity assets in these emerging markets now. I'll start with you, Ladislas, because I know one of your specialties is real estate. So maybe you could walk us through your process for how you evaluate different real estate investments in these different countries.
Look, I look at things from a macro point of view first. It's where and which jurisdictions do I find interesting from a macro point of view. Then I do my research, I go there, and then I ask myself, how do I play it? You know, Uzbekistan, again, case in point, went there for real estate, left with a brokerage account. Jesse, you're in Serbia right there, right now. I go to Serbia on a regular basis. Like 18 months ago, I went there. I really wanted to play Serbia. I couldn't find a way to play Serbia. Real estate was already quite expensive, became even more expensive. So maybe I should have played it. But I just couldn't find a way to play it. So it just really depends from country to country, how you play the story, how you play the economic development. So there's no clear, A, B, C, D. If there was, life would be easy, but it's not. It's just about finding the right jurisdictions and then asking yourself how to play it. And in many cases in these countries, it's actually really hard to play. Sometimes you can't play it.
Right. And so with these properties, for most of them, are you, for those who maybe are interested in the real estate side of things, are you buying properties to then rent them out, to turn them into Airbnbs, to flip them at a higher price? What's your process, and is it more of like a case by case basis?
Case by case.
Yeah.
In Montenegro, I operated a bunch of flips. In Mexico, I'm doing long-term rentals to Europeans because Americans have taken all the nice places. Europeans are a bit squeezed for money, so we're targeting Europeans with kind of cheaper rentals where Mexicans used to live. We make them a little nicer. We put Europeans in there. We get good yields, long-term rentals. Colombia, doing the Airbnb thing, midterm rentals for North Americans. So look, and in these markets, your capital can go a long way. In countries where there isn't any mortgages, where there's no lending, look, everyone has money for, well, not everyone, but like a lot of people have money for like $100,000 apartment. So, when you buy something for $100,000 in such markets, generally you're competing with a lot of locals. But once you start going into bigger investments, you start buying not just a 2-bedroom apartment, but you buy a 5-6-bedroom apartment, and then you do a massive luxury renovation. Very few people have the capital to do this. So then you end up with a unique offering. And then you can buy cheap, renovate cheap, and then rent expensive to Americans. So that's the play in places like Colombia. So it just really depends on the market, on the opportunity, hence why spending time on the ground is important.
And Scott, any other sectors outside of commodities you'd like to highlight? I'm assuming your fund in Uzbekistan. Uzbekistan has a variety of companies in it. Where else do you look for value? Is there any value in any banking stocks in any of these countries? In tech, manufacturing? What sectors do you look at outside of the commodity space that you think it's important people consider?
I'll look at anything. Of course, everything moves in cycles. What's really interesting to me is, again, as I mentioned earlier, is the world bifurcates and you have a breakdown of globalization. Command and control over resources is going to be very important. So I'm predominantly investing into countries that have some semblance of, say, food and energy security, which South America, Brazil, Colombia, Argentina is interesting with the Vaca Muerta. So if you look at countries that have a good amount of commodities, the ability to generate exports and earn hard currency, but also use a portion of those exports to incentivize domestic manufacturing, those countries should do very well, whether it's, and then in terms of what sectors, financial services, sure, tech, if tech companies are listed, but financial services is an easy one, real estate, Food and beverage, again, the developing world is consuming more calories. For example, someone sent to me a few days ago that year over year, coffee demand in Uzbekistan or consumption is up 63%. I think it's about 800 grams per capita per year. So it's nothing. It's what we all consume in a week. But you can see where these trends are moving. It's like when I lived in Vietnam and Cambodia and Myanmar, and everyone said these countries will never be coffee drinking countries. Vietnam a bit different because they grow a lot of Arabica and Robusta, but there are coffee shops absolutely everywhere. I mean, there's thousands of them. So you've got this domestic consumption story, which means you can get away from the commodities, but commodities can be a great buffer, if you will. So for example, Uzbekistan has, last year it was the second biggest producing gold mine in the world after Grasberg, I believe. It's Morantau, which historically is the biggest producer in the world. So you've got a country that's backed by gold. They've got 35 billion of FX roughly in a $85 billion economy with debt to GDP of about 30%. They're going to do very well. So you can really look at anything that's going to incentivize domestic consumption there. Is these countries leverage up? But I would focus on commodity producers.
Okay, good to know. It's been a fascinating conversation. Ton of fun talking to you guys. Before I do let you go, Ladislas, can you tell us about the Wandering Investor and what you do there?
Sure. So I have a consultancy service, thewanderinginvestor.com, a YouTube channel as well. And essentially, I travel around the world full time looking for investment opportunities as well as opportunities for people in terms of second citizenships and second residencies.
Great. I'll put a link to that in the description below, as well as your YouTube channel. You've got a great YouTube channel, super unique content. So I recommend people do subscribe to that. Scott, tell us about the AFC Uzbekistan Fund. And for those who might be interested in investing in it, what's the process there?
Sure. So we launched in March of 2019. Fund's done relatively well since, of about 78% in USD. We accept US and non-US investors with different minimum amounts. If people are interested, they can contact us at our website or email me at so@asiafrontiercapital.com.
Great. I'll put the link in the description as well as the email address. Once again, guys, it's been an awesome conversation. Thank you so much for coming on.
Thank you.
Thanks, Jesse.